What happens when you combine the most innovative, eccentric and charismatic leaders, disruptors and founders from tech, with the pedigree and history of one of the most established institutions within the City of London? The Searching for Manā podcast will be produced in partnership with the London Stock Exchange. I'm Lloyd Wahed, the host of Searching for Manā. We're going to be interviewing some of the leaders, influencers and disruptors in the tech space, where I'm going to be trying to dig in and find out what's their Manā, their superpower, their magic. Jeremy, welcome onto the Searching for Manā show.
Thank you. Nice to be here.
Really excited to have you here in what is rarely sunny London. And we are in June 2024, for some context for the audience. Jeremy is the, amongst many, many things, co-founder, chairman, CEO with Circle, who have a full product range and are also very famous for USDC, which is the trusted, prominent stablecoin in the Web3 space, the digital dollar.
The world's leading digital dollar.
The world's leading digital dollar. And I'd like to know if you want it to be the only one. So let's get onto that in a bit. But yeah, really, really excited to have a broad-ranging conversation with Jeremy. If you could be so kind to introduce the audience to Circle, and then, you know, who you are and what you're doing within it right now, please.
Yeah, so, you know, Circle is a company that I co-founded about 11 years ago. I kind of came to this project from the prior kind of 2 decades before that, working on internet platform infrastructure from the early to mid 90s all the way through to when founding Circle. And I think have always been interested in how open networks, distributed computing, open protocols, open source software, this sort of whole, what I think of as kind of the DNA of the internet, how that could be applied to transform the various types of utility that we have in society. And so for the Web 1.0, Web 2.0, that was working on infrastructure to distribute software to browsers, or to dynamically publish and distribute information and data, or technology to make it possible to do video on the internet or stuff like that. And really in 2012, got very excited about the birth of crypto as a technology, the promise of blockchain technology. And back when we were starting the company, you know, it was very basic technology at the time. Bitcoin was there, but there were a lot of technologists, not that many compared to today, but it was a small group of people, relatively speaking, who were really thinking about the fundamental pattern of a blockchain. How could you take this forward? How could you enable the use of this technology as an environment where you could issue other assets, where you could write, you know, what were back in from white papers from 2012, the idea of a smart contract. And all of this really captured my imagination. And for me, I was interested in essentially, you know, was this the technology that was going to make it finally possible for the internet to have a native form of money? And the more I dug in, the more I became convinced that over time, these blockchain networks would evolve into kind of general purpose operating systems, and you could actually begin to build other protocols on top of these, other applications on top of these. And so we had this idea back in 2013 of, what if there was an HTTP for money, HTTP being the protocol of the web, and what if, you know, you could have like an open protocol, and you could actually issue and deliver, you know, what we think of as real world money, which is say $1 or €1. What if you could issue digital currency units of that and have it be open and accessible over a protocol that anyone could connect to, anyone could transact over? And then even further, what if you could you could connect that with smart contracts and you'd have like programmable, composable money. And that just really captured my imagination. That was back in early 2013. And so we founded Circle with that vision. And really, as you noted, right, we've built this up. Eventually the technology to actually build that protocol emerged with Ethereum. And that led us to build and launch USDC 6 years ago. And since then, USDC has grown to be one of the largest digital dollar stablecoins in the world, and is an extraordinary global network now, and so that's there. And today, at Circle, I'm the CEO and responsible for running the company.
Lots to do. So we'll in a later part of the show dig into some of that journey you've had with the company, because
sure.
10 years or so is very interesting. And I know you get to talk a lot about current topics, but it'd be just as fascinating, I think, for me and the audience to go into that journey.
Yeah, sure.
But to stay in the current, could you talk around some metrics, just so for anybody who doesn't know, perhaps, what USDC's market cap is, geographically, where it's set, any interesting traction and user case that you're particularly proud of?
Sure. Yeah. So for perspective, USDC today there is around 33 billion USDC in circulation.
Yeah.
USDC is as a protocol is like connected into virtually every digital wallet, exchange, protocol, blockchain, like out there, and so it's widely integrated into like kind of the product stack of anyone and pretty much any product that touches the blockchain ecosystem. So it's a widely adopted technology as well. We have handled over $15 trillion of transaction volume using USDC since we launched it. So pretty extraordinary amount of transactions.
Jeremy, on that, is there something that demonstrates its expansion in use? Hence 15 trillion since 6 years ago.
Yeah.
What would the last 3 years of cadence be there?
Yeah, I mean, the last 3 years have been tremendous growth, right? And actually, if you look at even this year, like stablecoin transaction volume growth for USDC has been faster than any other stablecoin. And that's because, in a sense, right, we kind of sit alongside other major technologies that are growing. And so one of the constraints on the adoption of stablecoins historically has been, the blockchains are slow, or there's expensive fees that you have to pay. And so if you can increase the speed and you can decrease the cost, then you're going to increase the velocity of transactions that can happen. And so we've seen that through, blockchains like Solana have exploded in use, and for different kinds of consumer applications and DeFi applications and digital content applications. And so alongside that, you've seen this explosion of transaction volume as well. And so the basic concept is when the marginal cost of sort of storing and moving value goes to zero, the velocity of money increases pretty significantly. And so we've seen that. We've seen that over the last few years. But some other metrics, I mean, USDC is used in over 190 countries.
How many countries are there?
There's actually, I think, over 210. I don't know the exact number, but I think it's like 209 or...
Patrick, how many countries are there? Yep.
We're close. All right, good.
So nearly there, yeah.
Nearly there, yeah. And it's because it just exists on the internet, and blockchains exist on the internet, and it's anyone who has software can use it, right? It sort of has that connection. What's been really interesting to see is the growth in the evolution and use of USDC. So when we started out, we had a big vision for it in 2016 when we first had the idea. 2017 as we were building it, and then when we launched it in 2018, we had a big vision of, hey, we're going to create this protocol, and all forms of value exchange are going to happen through this over time. And if there's a use case for $1, it'll be a use case for USDC. And so we still obviously believe that, and we can talk about that separately. But we had to start in what I call a bootstrap use case. So what was the bootstrap that was going to happen to kind of get this going? And that was digital asset markets and DeFi. And so we really focused our energy on how do we get this technology adopted by all these developers that were building like on-chain protocols that were innovating in the Ethereum ecosystem.
I'd love to know, Jeremy, the first or significant, if it were, DeFi product where you had the moment of, oh, okay, this is really getting traction.
Yeah, I mean, there were several that all happened around the same time. Compound, Aave, Uniswap, DYDX, like these were the products and these were like the first major wave of DeFi innovations. There were many others as well. MakerDAO and DAI itself adopting USDC as a form of collateral, and so pretty much all of the like leading emerging Ethereum DeFi projects, like we built good relationships with those teams and they adopted USDC.
Just explain for anybody who wouldn't know, why would a MakerDAO at that point, why would they use it?
Well, so if you know the history of MakerDAO and DAI, and I actually understand that their original like founding, like they were here in this building, which is kind of cool. Someone just told me that earlier. That is cool. I didn't know that. Yeah. This was actually supposedly like the actual like the address that was on record as like for the the foundation or whatever.
Now it changes to that's why we're here. Okay, interesting. Yeah. That's amazing. I know Stephen and didn't know that. Okay.
So anyway, I mean, essentially, the way that DAI worked was that you'd effectively provide Ethereum, and essentially you'd get to borrow DAI, and it was the Ethereum kind of over collateralized the DAI, and so it was a way to borrow against your Ethereum.
Yeah.
It was really like a lending protocol. It was like a debt creation protocol. Even though DAI itself is a stablecoin, effectively like it was issued against ETH, but there was a lot of volatility with Ethereum, and there were like huge market swings and corrections and crashes and other things, and that caused the kind of price stability of DAI to kind of get challenged. And so they then implemented this kind of framework where the collateral, they kind of came up with what was called multi-collateral DAI. So they basically created a way, they upgraded the MakerDAO system or the DAI system to allow not just ETH as collateral, but they would allow other assets as collateral.
Yep.
And the idea was like, if it's all tied to a highly volatile commodity asset like ETH, it sort of creates more challenges for the stability, the price stability of DAI. And so they basically approved USDC as a form of collateral. And of course, having a stable value digital dollar like as collateral against DAI was really helpful for its overall kind of stability. So that was sort of how that got adopted. In that.
Amazing. So then this all comes incredibly quickly. The volumes are incredibly exciting. I wonder if you could talk to then when the first significant challenge happens next.
Well, I mean, as someone who's been building in this space for 11 years, the challenges are always coming.
Yeah.
There's never a moment when there's not significant challenges. So I like to sort of describe it as like playing a video game, and you're like playing the level and you beat the monster and you go to the next level and you're like, holy shit, like here's the next monster. And it's just like you level up and it's just like, okay. So there's always challenges. And I think doing hard things, like that's what happens. But I think with like USDC, I mean, look, we as a company, Circle started obviously in 2013, and we had kind of multiple products that we built over time. And the founding vision of like a way that money, like traditional money, should basically function as digital currency, should work over public blockchain rails and could move frictionlessly. And we wanted to create a safe way to do that, where you could have interoperability between the legacy electronic money banking system and this new world of blockchains. like the very first thing that we did before it was even possible to build something like USDC is we built something called Circle Pay, which we launched in the UK, Europe, US, etc. And it basically allowed you to take dollars, pounds, euros, and instantly convert them into Bitcoin and transact over the Bitcoin network and kind of come out the other side. And that actually grew a lot. We had 4 million users and so on. My point here though is we had that product, and then we then built a legendary trading business called Circle Trade. We were like the first or second largest OTC trading firm in the world. It was a huge money-making business for us. Then we bought an exchange called Poloniex, which was a huge exchange at the time. It was pre-Binance. It was like the biggest kind of number one, number two for a while. We acquired that. We bought that, and we launched a retail investment app called Circle Invest. So we had a lot of things going on. And in all that time, we launched USDC. And we decided to kind of start working on this in late 2016, when it's sort of clear that like Ethereum could become a tech that we could use. And then we published a white paper on USDC in the fall of 2017.
But that's taking you at that moment, with all of this positive traction and opportunity, to make a decision of continued expansion or focus, or in the current suite of products, which sound like there was profit and opportunity, a refinement of course.
Yeah, so here's what happened. I mean, basically, there was a huge market correction in the spring of 2018.
Yep.
Then you went into a deep crypto winter. Basically, like the entire market went down really, really badly.
Yeah.
Products that we had that were generating revenue and generating income basically became either break even or started losing money. So we were basically like burning capital incredibly fast. And in 2019, which is like the depths of that crypto winter, it was very difficult to raise capital. And so at the same time, so we had basically like, costs were getting out of hand. We were running out of capital. And if we didn't do something, like we would have gone bankrupt. At the same time, so we launched USDC fully in October 2018. In 2019, that's when we actually started getting all this product market fit with the DeFi protocols. Like they were like this.
The volatility.
Yeah. But it was also just like the tech was evolved. Like Ethereum got to a point where like you could actually like, and there was MetaMask and there were other products, and it got to a point where you could really start to use this stuff. And so the volumes were tiny at the time, but the developer community loved it. And we looked at that and sort of said, look, this is the core vision of the company. This is like the heart and soul of what we're trying to do. And we have these other things. And so we effectively, in an incredibly fast period of time, sold 3 of the businesses. We sold Poloniex, we sold our trading business, we sold our retail investment product, and shut down and wound down this kind of payment application that we had. And we were able to generate capital that was needed, right, by liquidating these businesses. We restructured the company completely. It was a massive restructuring. So some of the people were spun out to companies that we had, businesses that we had sold, restructured the company. And basically, in that fall of 2019, we were, again, facing bankruptcy, but we had product market fit with USDC. And we said, we're going to double down hard on this. We're going to put 100% of our energy behind this. We're going to build out a whole platform around this that's focused on activating the adoption of this. And it was a bet the company move. And there was no revenue coming from USDC at that point. Like there was really no revenue at all. But we were basically saying, this is like, I felt strongly, I remember very vividly that the time had come for stablecoins, that stablecoins were going to be eventually the like a core part of the whole international monetary system, that this was the right long-term architecture for money in the age of the internet, and that we had the right thing, and we would be able to figure it out. We would be able to figure it out and build value, and we just pushed really, really hard on that. So that was the first really challenge, major. There were other challenges before then, but with regard to USDC, it was sort of that. It was really about the existential moment for the company, as opposed to USDC itself, which it had that early traction and had that growth, and it was happening, but it wasn't producing a business of scale yet.
And how quickly does that go to, okay, the bet the company has paid off? Quite quickly, I'm assuming.
Very fast.
Yeah.
So basically, we pivoted 100% of the resources of the company behind it. We put all the capital behind it. And I remember, quite vividly, we kind of announced that strategy in January of 2020. And I remember the entire homepage of circle.com basically became this giant kind of billboard for stablecoins are the future of the international system. And the only call to action was get USDC. That was it. That was the only thing you could do. Everything else was gone. And then March 10th, 2020, we announced the Circle platform release, which was basically a whole upgrading of the accounts for USDC and how it'd be used, and a whole bunch of new APIs that would allow developers to seamlessly connect banking and cards and other things to on and off ramp USDC. And we built this whole thing around it. And that was on March 10th. And on March 13th, the world went into lockdown with COVID.
Yeah.
And what's interesting is that in February of 2020, right before we launched, USDC started growing. And I believe it started growing driven by demand out of Asia, who were already internalizing the fact that COVID was happening. And really, this confluence of things where you had essentially people fleeing their financial systems into digital dollars out of fear. And then you had this, these huge emergency measures all around the world to inject liquidity into the economy so the economy didn't go into a Great Depression.
Yeah.
So you had this extraordinary, highly coordinated around the world, massive liquidity injection, which then actually led to people sitting around and sitting with their government surplus checks and what are we going to do? But there was this change that happened in the world, which was documented heavily at the time, which was there was a hyper acceleration in digitalization, right? This was metaverse came out of this moment in time, right? We're all virtual, and every digital product exploded, right? Every digital product exploded, from Zoom, obviously was the story of the time, to at-home digital exercise, Peloton, right? But everything just grew. E-commerce, retail, digital payments, digital markets, everything grew. It was this 5-year acceleration in digitalization. And right alongside with that was this huge acceleration in blockchain tech adoption and in digital asset markets. And, summer 2020 was DeFi summer.
Yeah.
Summer 2020 was DeFi summer. And so USDC went from 400 million in circulation at the beginning of 2020 to 4 billion in circulation at the beginning of 2021 to 40 billion in circulation in the following year. Okay, so dramatic growth. And
what would you do with an evening when you're just looking at the numbers changing?
I mean, it's just staggering.
You're just walking around.
It was just staggering, totally staggering. And so
did that become positive pressure for you, or what? I'm sure it was different on different days. Was it a period you look back on incredibly fondly, or was the pressure heavy?
I mean, look, still pressure heavy, very much still pressure heavy. And I think
And your organization is distributed at that point because of COVID.
Completely distributed. And so as the business started to scale, we were like, okay, we got to hire. So we like doubled the size of the company. And we made a decision in that summer of 2020, like, okay, we need to start hiring more. We're like, we're just going to hire people wherever they are. Like, we're going to find the best people. And so from, a low point of 59 employees, we doubled to 120, then we doubled to like 240, and then we doubled to 400, and then we doubled to 800, and now we're approaching 1,000, right? So it's just like, but completely distributed all around the world. I mean, there's some big centers like New York City area, San Francisco Bay Area. We've got a good number of people here in London. We've got a good number of people in other European capitals, a huge presence in Singapore and in Taiwan, and we're actually in almost every major US city. But we hired talent and scaled that. But I think it was still, it wasn't just the challenge of growth. Like we haven't yet scaled monetization at that point. But it was very clear, like, this is happening. It's happening at an accelerating pace. We were in this market cycle where there's huge amounts of capital going into the blockchain ecosystem, and it was very clear, like, we were sitting on one of the most important assets. And I don't just mean financial assets, but we were sitting on like one of the most important sort of technology, network, utility, financial assets out there. Like we had nailed it, like we had figured that out, and we needed to scale.
I think at the beginning of financial technologies emerging, it's quite hard, unless you're the individual or the very close team who have the vision, to differentiate. Mm-hmm. So if I relate to these periods where stablecoins became a thing, as they aggressively did around that period, to be frank, to start with, I couldn't necessarily differentiate. It would more be someone might recommend this one or the other lightly. And so I'd be very interested in how you would try and differentiate. Sure. But if I come up to speed now, there's vastly different philosophies in the various stablecoins, which has worked very well for you guys. So congratulations. But it's that point around the beginning, of the neobank era. Yeah. What's the difference? It's the difference of a color of a card. Yeah. And then you take the philosophy of the founder and the founding team and their vision, and it can be the difference of an investment bank or a retail bank. Mm-hmm. So how are you thinking around that time about what the true principles you do with this huge traction?
So we've always, there's like bedrock principles that we've built the entire company around, but also very much specifically USDC. Yep. So what are those bedrock principles? We've always built on a bedrock principle of basically transparency. So transparency has been a huge focus for us. We were the very first stablecoin that basically published 100% of our reserves with a top global auditor and accounting firm attesting to it every single month. That was huge, transparency. The second was regulatory compliance. Our view was like, this is a real digital dollar. This needs to be issued under a regulatory regime. And so from day one, USDC has been issued as legal electronic money in the United States under the same regulations that issues your PayPal balance, your Apple Pay balance, your Venmo balance, all these things. So
what was your thinking there, Jeremy? Because just again, it seems so obvious now, but it wasn't an institutionally cooperative landscape there.
It was
philosophically.
Law. If we wanted to issue this product in the United States, that was the law. Like, it is electronic money transmission, and so we could go and like set up somewhere offshore and sort of try and do this like outside of the law. But I'm building an American company. I'm building a global company. And we, from day one, this goes back into the history of Circle. From day one, our philosophy was, we are going to sit at the intersection of the existing financial system and this new world of blockchain-based money. And in order to do that, the US government provided law in March of 2013 by saying, if you are a firm that sits at the intersection of the banking system and virtual currencies, you are an electronic money transmitter and you must have a federal registration with a full program around anti-money laundering, and you need to be licensed in every state that requires a license for this. So we said, okay, to do what we want to do, we have to do that. And so we were the very first company in crypto to be licensed from C to signing C.
Yep.
We were the very first company in crypto to get an EMI license in Europe. We were the very first crypto company to get what's called a BIT license in New York, which was the first crypto-specific licensing regime. We were the only company with BIT license for like a year before anyone else. We've always been regulatory first, walk in through the front door, make sure that we have good compliance, sound compliance. And by the way, in doing that, we're able to actually meet one of the other objectives, which is liquidity. Well, what is liquidity? Liquidity is you can actually create and redeem it. You can actually connect an actual bank account and you can purchase the stablecoin and redeem the stablecoin. You can't do that if you're, shady and offshore and no one wants to give you a bank account. And it's like, I don't even know where the banks are, right? So we were the first company to have high quality banking.
Yep.
We brought on major strategic partners like Coinbase to become massive retail distribution for this, so that anyone with a retail bank account could easily get and redeem USDC. And then we offered this at an institutional level. So you had transparency, compliance, regulatory, actual liquidity that was there. And then like technical innovation, like we were constantly figuring out what are the things that we could do with the protocol itself. And we think about USDC as a stablecoin network protocol. And then how do you work with developers to gain that and adopt that? So those bedrock principles are why we are where we are today.
Yeah.
And we're just continuing to build on those, not just in the US, but in almost every major market in the world. And so those things kind of, I think, have been, fundamental to why we were having success early on. I mean, why did DeFi protocols say, oh, we're going to use USDC? Well, because it was liquid. You could create and redeem it. You could use your Coinbase account. You could use a Circle account. It worked with the banking system. People knew what it was. They knew it was not illegal. It was a legal electronic money instrument. And they, had the transparency that we always provided. So it was trusted, right? So those were all really critical factors to why what we did took off more than others.
Just last question on the here and the now, and bring us up to speed on the organization. And then we'll go into some of the background, the middle part of the show. The question I think that you probably get asked often, so I'll ask it in my own way, is I'm imagining that I'm an incredibly large institution, and I like one of the products that the way for me to interact is using USDC. Mm-hmm. And so me and my team are going to look at how to prove the flow of funds to the end. Could you talk us through that point around liquidity, trust, and security from as technical a perspective of it's secured in T-bills, for instance?
Yeah,
please.
Sure. So there's a couple ways to think about this. There's sort of the financial stack, which sits there, and then there's like the technological and operational stack. So at a financial stack, as my CFO likes to say, Circle is, we believe, the most transparent financial institution in history. What do I mean by that? If you look at a bank, if you look at an insurance company, if you look at many other types of financial institutions, they are not giving you real-time data on what's happening with their product or daily transparency into the fundamentals of the balance sheet of those products. Those are things that we do. So how does that happen? So the first is that when we receive dollars, effectively, those dollars, before we mint USDC, those dollars are held in reserve. The reserve itself is in accounts that are by law segregated for the benefit of customers. We are required by law, and we have regulation around us that requires that these are segregated for the benefit of customers. We cannot issue that electronic money instrument until they are actually segregated. And that is under the title of those customers. So one, by law, by regulation, by supervision, but then in practice, right? So we put into reserve. So what is that reserve? So today, that reserve really consists of two parts. 90% of that reserve is in what's called the Circle Reserve Fund. Now, this is really important. We wanted to make sure that to the world that everyone who wanted to know what USDC was could actually see it and see in a regulated vehicle exactly what the reserve was. So we built a partnership with the largest asset manager in the world, which is BlackRock. And we created something with them called the Circle Reserve Fund. The Circle Reserve Fund is essentially a government bond fund, a government money fund that solely exists to hold the reserves of USDC. It is issued and regulated. It is issued as a security and regulated by and supervised by the SEC. It has independent audit, independent board, and 100% of the assets in that are visible to you right now, and they're updated daily. If you do a search on the internet for USDXX, you will go to the BlackRock site and you can literally see every single T-bill, the amount, the purchase date, the maturity. You can see that every single T-bill matures in 90 days or less. So it's all the most liquid, like literally the most liquid price stable dollar assets in the world. And it's overnight treasury over collateralized repo with the biggest GSIBs in the world. So effectively also T-bill assets. And so you can see literally every single element of that. And anyone who understands market liquidity in financial assets will tell you if we needed to redeem 100% of that in 24 hours, we could do it. Okay, so that's really important. That's 90%. The other remaining approximately 10% typically is cash held almost entirely at several global systemically important banks. So banks that are deemed too big to fail. There's about 50 of them in the world.
JP Morgan's.
So we've talked about some of them publicly, but yes, these world-class global systemically important banks. And these are banks that are deemed too big to fail and effectively have the backstop of the government. And so what you end up with is a reserve, which is a cash equivalent reserve. It is this truly liquid asset. So that's what's there. And then we have kind of the pipes for institutions to be able to create and redeem that all around the world. So, and that's also because we're a regulated company. Banks and other regulators around the world are willing to allow us to operate in their market. So we're regulated in Singapore, we're regulated in Europe, we're building new distribution through regulatory partnerships in Japan. But effectively what that means is that institutions can onboard into Circle and create and redeem USDC within the Singapore banking system, within the Hong Kong banking system, within the Brazilian banking system, very soon in the Mexican banking system, obviously in the US banking system, and in the European banking system. So if you have a bank account in one of these places, or you're an institution in one of these places, you can create and redeem USDC, and all the funds flow into this reserve structure. And so you have liquidity in terms of the actual ability from within these banking systems to create and redeem this. And you have the liquidity of the underlying reserve. And you have the belts and suspenders of this sort of publicly registered reserve fund structure that's there. And you have an overlay of regulatory oversight of this by prudential regulators. So that's the structure. That's what it is. And so if I'm someone who's saying, I'm using this, that's what you're using. That's what you get access to.
Well, thank you, Jeremy. What you're hoping for when you bring new products to market is that they're better And so there are periods where you can differentiate pros and cons until it hits a critical mass and becomes better.
Right.
We'll leave for the end of the show your vision, where I'm sure with what you've just explained, we can see why that could be better than what existed before. Just to change the gear now, really want to kind of go back and try and understand some of the influences which have created an individual who's redefining the payments and financial landscape, which is all just unbelievable. So congratulations.
Thank you. Yeah.
I know that you're thinking about in your computer game who the next horrible bosses you've got, but it never ends, the obstacles, I understand. So if you could go back really as far as possible in terms of informative years, and perhaps a story that might explain to the audience and me something around your character and influences.
Sure. I mean, I'm happy to share some of that. I think a couple things that are relevant. I think I was Montessori educated, or I went to Montessori school, and that was influential for me because that was a learning environment which encouraged risk-taking and encouraged you to explore and pursue your own ideas. It was not a rigid top-down education. It was very much a you're in charge of your own destiny, and encouraging kind of you to kind of pull the threads that are interesting to you. So that actually influenced a number of things for me.
My daughter Lily went to Montessori.
Oh, that's wonderful.
And we moved her at 5 to not Montessori.
Yeah.
I'm not sure.
A lot of people do
I want to
into
Jeremy here.
that. I did it up to 5th grade. So like I did.
What age is that?
That's like 10 or whatever. Yeah.
Amazing.
So that was important, and sort of the kind of progressive Deweyite education kind of model. I have one other sibling, and we were our parents. They were not in business or entrepreneurship or anything like that. They were social workers, worked in mental health, did a lot of progressive work, ran homeless shelters, like a very different background. But they were also people who I think really believe we're here to improve the world, and we're here to change the world, and like big hard things like civil rights, or just so many big hard things that have happened historically are that you can do those things. And so I was raised with that as a backdrop, and that was important for me. And then I think probably a catalyst moment was when my brother and I convinced our father to get us an Apple II computer in 1982 or something like that. That was a really big deal. And so we got an Apple II computer in 1982 and just obsessed on it, right? So we were born of the Apple generation, born of the PC revolution, and just spent endless time hacking, learning, doing all of the things that you did with that. And that was like a revolutionary device.
What did you do? What
we did everything from like learning how to like build databases and spreadsheets, to learning programming languages, to like transcribing machine language into like games that you could build, getting connected to using the earliest modems, like the old like phone kind of modems, and like connecting into what were the earliest forms of the online virtual world, like all this stuff. So, and we're constantly figuring out how to apply that in different ways, and became, I think, as young adolescents, like really excited and motivated by the stories of Bill Gates, of Steve Jobs, of Mitch Kapoor, who had founded Lotus, of these people who were inventing the future, right? And so like was like very, very aware of these people, and like as books and stories and documentaries and other things came out, it was like, this is amazing, right? So fast forward, so that was a big influence, right? And sort of I was just a deep believer in the power of computing and personal computing to kind of be democratizing in the world.
Where were you getting that pop culture from? Was that from the community who were also playing around with the Apple?
Yeah, certainly the people who were playing around with it and stuff, but like there were magazines and stuff, like Byte magazine was like a early magazine that was like for diehard computer users and stuff. So you'd get the magazines, you'd read the stories and stuff, and you'd pick it all up. So then fast forward, so that was like fairly significant. And then when I was in college, I don't have a formal technical background. I like learned how to do coding young, but I didn't study computer science, did not become a professional. I eventually did like write software professionally a little bit. You wouldn't trust me to like do anything serious, but very self-taught technically. But in 1990, I was in college and I was studying like basically political science, economics, philosophy, like this mixture of things. And at my college, my roommate, who happened to be like best friend from high school, my roommate, he got a job, you know, you had a job to help pay for college, like a work study job, we call that in college, where, you know, you do different things. He had a job working for what we now call like the IT department of the college. And the college is Macalester College in Minnesota. The college had gotten connected to the internet. And they'd gotten connected, I think, in 1988. And at that point, it was actually something called NREN, the National Research and Education Network. And there was ARPANET, which was the Defense Department network. It was the military network. But then National Research and Education Network was sort of like universities and colleges could connect to it. And then there were other clusters of universities around the world that were connecting to this over TCP/IP, the routing protocols. But in 1990, I got essentially what was a high-speed internet connection at the time into my dorm room, into my personal computer, and I was, you know, like, I'm going to check this out, and it was like just totally mind-blowing. Just like, I cannot believe this. And trust me, the internet in 1990 is really different. But it really revolutionized how I thought about the world. So I was studying basically the collapse of the Soviet Union, and I was studying comparative economic systems, and I was very, very interested in journalism and very interested in kind of, you know, international journalism. And so I like plugged in, and all of a sudden I was in direct communication with people behind the Iron Curtain who had access to the internet through research university programs. And I was communicating to them about what they were witnessing with tanks rolling down their streets in the Baltics. And I was communicating with people who were in the midst of ethnic cleansing in the former Yugoslavia, in the Balkans, and communicating with the Serbs and the Croats and the people in Sarajevo, and like getting what you'd think of as citizen journalism, and like trying to parse through all of that. And it was just like one of these moments where I was like, this is just so transformative. And my belief was, you know, this is going to change the world. This is like disintermediation, this concept of an open network where anyone can connect and anyone can share information that connects anyone in the world. And I could see that you could do that with a personal computer. It was like, wow, everyone's going to have a personal computer. Everyone's going to be connected to this. This is going to change the world. So I went super deep technically on the internet. Basically, I was like, I need to understand, like, what is an IP packet? How does it work? Like, from the bottom up, like everything on the internet. I had to learn it all. And then I just became obsessed about it. I made it the center of my academic work. And then when I graduated college in 1993, there were no jobs. It was a recession, end of a recession in the US. And I just said, I'm going to be an internet consultant, whatever that meant. That led to like co-founding my first company and inventing like a new paradigm for how you could use the web for software distribution and programming languages for how to build interactive applications on the internet. This is in the mid 1990s. So, but kind of it was all sort of brought in through those moments and those experiences, and this sort of radical empowerment that happens. And I would say that the same things that motivated me about the internet in 1990, 1991, 92, all these periods, pre any commercial internet, the same things that motivated me about it then are exactly the same things that motivate me about it right now. And if the internet has revolutionized information and communications, right, the internet hasn't revolutionized our political and economic systems yet, and it's going to. And this technology is what is going to do that. It is going to be what lays down a completely new infrastructure for society that is going to build from the ground up systems of governance, systems of economics, systems of value exchange. All this is going to get built up on this infrastructure. And so that's sort of exciting. And when I think about the founding of Circle, when I was looking at this in late 2012, early 2013, I was like, man, when the web emerged in 1994, when the web emerged, I was just, in my early 20s, and I was convinced like it's going to be the platform for all information and software in the future. Like I knew that, but I was really young and I didn't have all the skills that I needed to like go after it in a big way. I mean, I helped co-found a company that went public. That was amazing. But when I looked at what was happening with blockchain and crypto, and I could see that it's like a similar moment, I thought this is gonna be way bigger than the web. The ultimate impact on the world will be way bigger than the web because we're talking about money and the economy. And like it's gonna be bigger, and it might take 20 years, but that'll be the best 20 years of my life. And that's sort of what led me into kind of the pursuit of Circle right now.
That gives us a really good flow through most of your and then Circle's trajectory. So thank you, Jeremy, for speaking so openly. And it is such an exciting moment. So if I've done my maths correctly, we've got the most exciting 8 years to come. I want to do a quick Manā round, which we do in every show, just to compare guests' answers. And you can keep this as yes or no, short form, or really something piques your interest, elaborate. First question. If you were to be able to put a message onto your favorite publication, perhaps it's the one that you and your brother used to read when the internet was dawning, what would the message be?
So I got to clarify the question. Like this publication exists now, or it's in
what's one of your favorite publications?
It
could be the FT, the Economist. It could be
yeah, the Economist is pretty good. I
so
like the Economist.
you've
got the cover of the Economist.
I mean, yeah, you're someone who I'm sure will have this many times. So you have the cover of the Economist.
I have not been on the cover of the Economist.
Okay, well, here we are.
I should go visit them. I'm in
Here
London.
it is. Here it is. We'll send this to them post. So be careful what you say. What would you put on that cover?
I would just say the phrase, the birth of the internet financial system.
What keeps you up at night?
I sleep like a baby. I sleep great every night.
Do you have a particular mantra or affirmation that you go to regularly?
I very regularly wake up and think about gratitudes. So I think that's a really important thing. I also practice mindfulness meditation every day. So I like to find a period of time when I can focus and breathe with intention. And it's not mantra meditation. It's sort of really just it's breathing meditation, right? But so I don't have a mantra in that sense, but I think I try to kind of like baseline my energy without trying to not be focused on my thoughts. So that's really important.
Favorite of all time book?
So it's a fictional book. It was called The Things They Carried.
Could you give the
It's basically a narrative of a young man's experience going through the Vietnam War.
notes? AI, friend or foe?
Is AI a friend or a foe?
Yeah.
To be determined.
If we specifically thought about the future of work, and let's suggest the unmiddling of the workforce, do you predict that's going to happen?
So I definitely believe that the combination of these kind of compounding technologies like AI, synthetic biology, nanotechnology, quantum computing, blockchain, right? I think that we are likely to see extraordinary improvements in the economic output of the world, and major breakthroughs in energy technology, in food and health, and all. So I believe we're going into an era of extraordinary productivity growth and abundance.
Okay, it's a whole other podcast, so
Yeah,
we'll leave
yeah.
we'll leave that there. So final question of the Manā round.
Yeah.
We're going to try and find out what your Manā is, Jeremy. So just to explain, think of it as your magic. And if we use the gaming example, you have on one power bar side your life, and on the other you have your Manā. So this is your superpower. What would you say your Manā is?
I think fundamentally it's my optimism.
So that gets you through all of these final bosses when you know there's another boss, and you have to stay so true to that mission. So for the final part of the show, I like to invite on Patrick Daniel Barrett. Ask those big questions, Patrick.
Yeah, absolutely. All right, where do I sit? Thanks for coming on. Thanks for wheeling me out of the storage for this.
So Patrick is the co-founder and managing partner of Members Capital Management. We are regulated, funded fund who are focused on providing a reinsurance fund strategy that is using USDC.
Awesome.
And we thought it would be interesting for Patrick to introduce himself, and also just has a couple of questions for the close of the interview, if you don't mind, Jeremy.
Yeah, sure.
Yeah,
if you take it away, Patrick.
Yeah, well, I won't spend too much time on my introduction, but yeah, Lloyd and I have come together on this. Talking about insurance as something exciting is not something you hear every day, but it is actually quite an exciting proposition, which is what's drawn us to this idea. It's on one hand this sort of fundamental daily necessity, but it's also actually quite a large opportunity. So we think of it as it's sort of the grease really that makes the economy run. You can't start a business, you can't buy a house or a car. Global shipping essentially relies on it.
Absolutely.
And yet, over the next decade or so, it's like predicted 10 trillion of additional capital sort of needed to meet the needs. A lot of it's driven by climate change, but lots of other things. We think our thesis is that stablecoins and digital assets in general, in particular USDC, has a big role to play in that. At the same time, there's a lot of work to do, and probably much higher sort of institutional adoption and comfort, let's say, with USDC is probably needed. So to use an example that everyone would kind of understand, like a Lloyd's of London, for example, the day when they aren't looking at it as a sort of exotic sort of crypto asset, but it's just the digital dollar and everything else is sort of abstracted away.
Yeah.
What sort of specific challenges do you think are on the road to that path?
Well, I think it's a great example, like the application of stablecoins in what we think of as traditional financial products, right? So that could be trade finance, that could be insurance, that could be in collateral for a derivatives exchange. Like there's lots of places where we need cash and we need that kind of settlement, mechanism. So it's widespread, right? From my perspective, like the most important thing that's necessary is that digital dollars like USDC are deemed to be legal electronic money in the world. And so that's a very kind of, in some ways, black or white situation, right? So, for example, this coming week, MiCA is a regulatory framework which goes into enforcement for stablecoins for the entire European Economic Area. Okay, that's a huge, huge area. And with that, stablecoins, dollar stablecoins or euro stablecoins that are issued under the supervision of the banking authorities of the EU, those currency units will be legal electronic money in the European Union. That's a big deal. And what that means is that if I'm another financial institution, an insurance firm, for example, that I know exactly what this is, I know how to hold it on my balance sheet, I know how to account for it, I know what the actual fundamental risk of it is, and I have the assurances around it, and there's prudential supervision around it. And that's what's going to give me comfort that this is value I can take, right? And it's not like something from some offshore place that I don't really know, that isn't audited, that isn't regulated, etc. It's like, no, it's regulated, it's supervised, and it's this cash-like monetary instrument that can be used. So that's a here and the now. And that's what's happening all around the world. Every major G20 country is putting in place laws that deem stablecoins, the laws that deem stablecoins to be legal electronic money, and the rules by which they can be issued or distributed in their territories. Every major market is doing this. And by the end of 2025, that will be the case in almost every major financial market in the world. And at that point, financial market participants, whether they're insurance underwriters or households or corporations or others, will then feel comfortable that, okay, I now can freely interact with this and use this. And it's part of the financial system. As I like to say on the Economist cover, right, there's a new internet financial system that's being built, which is all on-chain. It's the internet-based financial system, and this is the base layer of money for that internet financial system, but it happens to be integrated to, interoperable with, and regulated in under constructs that are, consistent with the existing financial system as well.
Okay. So this is a slight side from that, but you'll see, I suppose, additional stablecoins coming on. How do you see? I mean, insurance is sort of a business built on trust, and a lot of that trust comes from management of risk. In fact, you could say all of it really comes from the management of risk. Yeah. And there's a lot of questions that have been asked to you already, so I won't ask those. But one that you don't hear as much, one that's interesting as this space develops, is sort of systemic risk.
Yeah.
And it's talked about a lot with, let's say, global banks, but
sure,
as this space develops, there'll be sort of new and emerging risks.
Yeah.
How do you think about that with respect to stable coins, with respect to exchanges, ironically to some extent, concentration of reserves in these GSIBs?
Mm-hmm.
How do you think about that, and how do you think the space sort of adapts to that?
Yeah, so I think there's sort of like short, medium, and long term, right? And I think if you take a kind of purist kind of central banker view on this, they could sort of fast forward to a world where the amount of issued stablecoin is in the trillions, and and it has this huge amount of velocity in the economy and the like. And I think in a world like that, you're going to need to evolve the requirements for this to be a little bit different. And it's really interesting to see there are governments that are taking different paths, right? Like the U.S. stablecoin legislation that's under consideration basically is sort of T-bills, reverse repo, and sort of limited amount of cash, like in the banking system, right? Pretty safe, etc. But you can imagine like it being like there's not enough T-bill, right? So what do you do? Okay. On the other hand, in MiCA, the European regulation, as you get bigger, they actually want you to keep the vast majority of your money in the credit financial system, which is really risky. Like, okay, now you're like spreading out your stablecoin reserves across 30 different banks, and you have all the bank risk of all these different banks, right? That feels like it's waiting for a different level of risk. And then say the UK stablecoin consultation, which they've put forward, they're basically saying if you want to issue a stablecoin, all of the reserves are held directly with the Central Bank of England. It's just government obligation money straight through. That's like going straight to the most safe kind of vehicle. But then they have a separate question, which is like, okay, if it's all government obligation money, and it's like, and it's absorbing more and more of the money in the real economy, well, how do you ensure that like credit creation is happening? And so there are a lot of like, these are all like the kind of macro-prudential monetary systems kind of, things that people have to be considered. We're thinking about all that, and we're thinking about how that evolves over time. And I think the good news is that there are thoughtful pathways through this.
Yeah. And do you see other stablecoins emerging, in the U.S., in Europe,
absolutely,
elsewhere in Asia? That
I think with the establishment of clear laws and regulations around stablecoins, you're going to see a huge amount of new products coming into the market. I think we'll see that with MiCA. I think we're going to see a lot of players launching, banks and non-banks, payments companies, neobanks, crypto companies, others. You're going to see a whole lot of new products launch. And certainly, you're going to see more in the US, but I think all around the world, you're going to see a lot of stablecoin products that are getting built and launched.
Yeah. And so if I can ask another one, I know we're running on time, but I guess to skip ahead of that, certainly the expectation would be lots of product. Where do you kind of see, do you skip to, the medium or the long term, as you mentioned, perhaps the end game on that? I mean, there's probably many views of it, but you kind of expect some consolidation in the long run where there's one or maybe a few that are sort of the trusted. How do you sort of view that?
Well, so the way we think about what we're doing is we're trying to build the largest and most widely used stablecoin network in the world. And so our conceptual model is we're building a network, and that network is a platform and a utility that other people can build on top of and integrate to. And I think it's the right conceptual model. And it sort of thinks about this as a technology platform that, again, like developers build apps that integrate to it. When the developers build apps that integrate to it, it creates more utility for the stablecoin network itself, which then draws more users, which then draws more developers. And you create these really powerful network effects that are at flywheels in the network itself. And so the sort of asset safety and stability, you won't differentiate on that because that'll be the law. The law will say this is what it is. You're gonna have to differentiate on like the technology, the infrastructure, the network, the platform adoption, the developer adoption, all of those things. And so I do think that this is a sort of internet scale platform utility model, and it will probably resemble the kind of competitive and market structure dynamics you've seen in other internet scale platform utilities, where there are several very large winners, and then probably a significant number of much smaller winners. I don't think this is winner takes all. And I think given the risks to the economy and the kind of structural competitive considerations, I don't think governments would even allow it to be. But I do think it is a small number of winners take most.
Well, thank you. I'll cut in now, or you just keep on carrying on, Patrick. Thank you for joining us on this episode. We hope you've enjoyed it. Please leave a like and a review and subscribe to our iTunes channel to stay up to date with the newest content. Find us on social media at Searching for Manā. Tell us who you want next on the show. Thanks again, and see you next time.